Stocks are finally poised for a move either up or down. Nvidia makes a fresh record, congratulations to subscribers. Mortgages hit 22 plus year high, but is a pullback for rates about to unfold? And if dollar tops, gold will pop. We're also expecting a rally for Bitcoin. All this and more in today's edition of MasterChartsTrading.com Friday recap for August 25th, 2023. As always, please don't forget to hit the like button, share this video, and make a comment if you have any comments or questions. This helps tremendously in promoting the video on YouTube. Thank you once again. As always, throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market trading indicators. You can find out more about them by going to the link in the description and finding out more about them. There, there's green, blue, red, and yellow line, which I use pretty much exclusively to trade pretty much anything under the sun. Looking at this chart for S&P 500, it has broken out into a new uptrend as late as April 13th, possibly as early as February of this year, February 2nd of this year, 2023. The reason for the discrepancy is that if we add in the dividends, like for example, this is ETF SPY, S&P 500 ETF SPY. Notice down below here it says ADJ, it means it's adjusted for dividends. If I unclick it, it will look exactly like the index, S&P 500. But if we do click it, in other words, we add the dividends back into the equation, we see that the breakout actually occurred in 2nd of February of this year, meaning that the S&P 500 has entered a new bull market in February of this year. Once again, the only thing I need to know about the security to figure out if it is in a bull market and an uptrend, if whether or not it has closed above my blue support resistance line. So looking at this chart for S&P 500, we have unequivocally proven that it is in an uptrend. All right, so we can put that to rest, that argument. Currently, about 3 weeks ago here on the 27th of July, a new 52-week high was hit, and since then we've been pulling back. We stopped pulling back on the 18th of August, or last Friday, and we've been sort of trading around this green support resistance line. I'm going to zoom in and I'm just going to show you what the price action looks like, and you will see that S&P 500 has repeatedly tried to get above that green support resistance line. For example, right there where I'm hovering on the 17th of August, once again on 22nd of August, on Tuesday of this week, once again on the Wednesday of this week, 23rd of August, again on the 24th of August, Thursday, and yet again today on Friday. So far we have hit 5 hits of that level, which is at 44.20, and without it being able to close above that level. So far this level is acting as resistance. So we're looking at this line. When we're above it, it acts as support. When we're below it, it is acting as resistance. Thus, support turns resistance. So right this instant, there is really no good way to put it. We're literally right in the middle. We can go either way. So a pullback further down towards this blue support resistance line is about 5%, and a new 52-week high is also about 5%. So we can either go up or down. This is the best I can do at this point. If we do pull back more, then we will become deeply oversold on multiple ways to look at it. We will become deeply oversold. If we hit this blue line, we will become, well oversold for many people to become interested. So we will become oversold based on price in the last video, I also showed multiple market breadth indicators, which are already oversold. But if we do continue lower towards the blue support resistance line, then we'll definitely become even more oversold, which means that the rally or a bounce higher will become more and more likely. So we can also look at this chart from a weekly perspective on a weekly chart. So each candlestick means 1 week's worth of activity. If you're using my indicators, make sure to change the value, the length value, to 52. So on the daily chart, it's 250. On the weekly chart, it's 52. Okay, 52. So a few weeks ago, there is the week of the 24th of July, and then the next week is the 31st of July, so Monday the 31st of July. Notice that this is a bearish engulfing pattern. The week of 31st of July completely engulfed the previous green real body of the previous week. So yeah, I'm going to show you what it looks like. Looks like that. That's a bearish engulfing. Next week of the 7th of August, we closed below this pattern, meaning that this pattern was confirmed. We had a follow through on the week after that, Monday the 14th of August. So far, this bearish engulfing is valid. Okay, so right now, once again, we're looking at this weekly chart, so the whole week's worth of activity on this in this one little candlestick. Notice that we have tried to get above this green support resistance line, which is at 44.20. It's the same thing as 44.20 on the weekly chart, and the same thing as in 44.20 on the daily chart. Just make sure you change the value, the length. Okay. So far, we were not able to get above it, so this green line is still acting as resistance. And there's the blue line at 41.88. That would be where we become deeply oversold. We will become extremely interested in buying stocks at this point. I mean, I'm already interested, but at that point, it's like, wow, we just need to pretty much get in pretty much as soon as possible. That's when we broke out around the blue line before in April. Well, even earlier, you can say that we broke out in February here. So overall, not a very eventful week. We just kind of went up and down, tried to get above this resistance, but failed so far. So far, not really much has happened overall with the general markets. So we're just, again, keeping the long-term bullish bias. Yes, we're in an uptrend, no change with that. But short term, we could go either way. We can go up or down. That's the that's the best I can do at this point. If we do go up, that means that we haven't closed our positions. Long-term positions are bullish. All right, we're open on the upside. If we do pull back towards the blue line, we'll be thinking about opening new positions on the long side. The bear market is way down below here at 36.75, so that's about another 16% down. We're not even remotely talking about that level yet. So we're in a bull market, but in the next few weeks, probably obviously into September and maybe early October, we could pull back, or we could make 52-week high, or we can just trade sideways. So there's not really much as far as predictions I can make at this point. Then again, I don't really like to make any predictions. We just like to trend with a trade. If we see a trade, then we take it. Right this instant, there are really no good trades in this particular security. But as you can see, we have many securities that we trade, including various many of the speculative sort of investments that I'm going to cover for the members only section. So stay tuned if you're a member. Looking at some of the stocks we traded very recently and were also in the news. This is Nvidia, ticker symbol NVDA. It just reported results, very good results, obviously. I mean, they beat by 29%. Stock didn't really go anywhere after this huge beat, but it did make a new 52 all-time high as a record high. For our purposes, we were not really trading it at this point. We were trading Nvidia back in February. So the Nvidia, there's the breakout. I'm hovering over it. An actual alert to my subscribers that was sent on February 15th. It was sent at $221. It is currently trading, I mean, it went as high as almost $500. Okay, so it is 118% gain. And if you got in, and I know some people did get in here back in February of this year, then big congratulations. You basically doubled your investment in this firm. Will we continue higher? And what does this mean if with such a big surprise, we barely made any move higher? Some people will interpret it as it's choking up, so to speak. So it's not really able to go higher. So there's Nvidia on the long-term weekly basis. You can see a largish candle, looks like a shooting star candlestick. And those shooting star candlesticks usually mean a pullback is in order. Will it actually happen? It's anybody's guess. Again, I'm not really making predictions, but right this instant, I wouldn't even touch it. I would keep my long position open. If I bought it back in February, then my position would still be open at this point. At least partial. I would have most likely taken profit where I'm hovering right there in August, and early 11th of August right there. But I would still keep at least part of my position still open at this point. So we'll see what happens. I mean, it's possible that we'll pull back, but if you're a longer-term investor or longer-term trader, then I would keep the positions open. And once again, if you did open in February here, then congratulations on your win. Switching gears a little bit, we're currently looking at a 30-year Treasury bond yield. And first of all, let's look at mortgage rates. This is a 30-year fixed rate mortgage United States mortgage rate, and it just hit 7.2%. All right, this is a 22 plus year high, a level not seen since 2021, right? Late December 2020. Okay. And at the beginning, or rather during the pandemic, right there where I'm hovering in January of 2021, the rate was around 2.6%. So if you got in and bought a house back there, then congratulations. Currently it is 3 times higher, almost. So what does this mean? Does this mean we're about to choke up? Let's look at this is a 30-year Treasury bond yield, ticker symbol TYX. Again, I'm looking at a long term. This is a weekly chart. So we just hit a multi-year high, obviously, because mortgage rate just hit a multi-year high. So the rates also hit multi-year highs. And now seems like we're pulling back. This candlestick, it's not very decisive. It's not yet a bearish engulfing or anything of that nature. It's just a red candlestick after we hit a multi-year high. Will it be the end of it? Maybe. It's possible. I mean, generally speaking, this is a bullish pattern. So this is, I'm just gonna draw it out. This is kind of like a bullish pattern. So this is a cup, all right. maybe we'll get a cup and handle. So right now we don't see a handle yet. So maybe we'll get a pullback and then we'll get something like that. That will be a cup and handle. We haven't gotten that yet. So where is it gonna take us? I'm fairly certain a pullback is coming for interest rates. By extension, the interest bonds are also going to rally by extension. Now, it's just from a point of view, so let's look at TLT, Treasury bonds. This is 20 plus year Treasury bond fund. Okay, so it's very oversold. It's deeply oversold. Also, notice the way the indicators just curved down next to each other, and they're very close to each other right now. So notice how even, back in December of last year, they were apart like 36 points. And now, very recently, they were apart like 18 points. And now the indicators are even less far apart. They're only about 13 points apart. So the more these indicators kind of curve together, it kind of narrow, the trading range narrows, the more likely it is that we're going to see a change of trend. So right now, Treasury bonds are moving down. By extension, Treasury yields are moving up. So they're moving in the opposite directions. So notice that we're going to see those Treasury bond funds indicators are going to come closer together. And in my experience, this is when the trend changes have more chance of occurring. Right now, the Treasury bonds are still in a downtrend, but the way this chart looks, it just looks like it's about to change. So I have a strong suspicion that this mortgage rate is probably going to be as high as it goes for a little while, and most likely we will get a pullback. So by extension, this Treasury bond yield, 30-year Treasury bond yield, also will most likely pull back. So if the Treasury bond yield pulls back towards about 3.6%, then we will see a turnaround in the yields, and the yields will continue lower. The red line is where I'm getting this number. So 3.68% is where it will become in a downtrend. Okay, and by extension, Treasury bond fund, if it rallies not even that far, just a little bit towards the blue line, from today's levels, we're looking at a move for TLT of 5%. Not a lot. Okay, so if we move that much for TLT, then we'll become in an uptrend. And so this would mean that, today I already heard that Federal Reserve Jerome Powell spoke about pausing interest rate rises. Perhaps the market is already feeling it and expecting that interest rates are going to be coming down, and so bonds are being bought. All right, bonds are being bought. Bond funds are going to be moving up. Bond yields going to be moving down. What do you guys think? What's your opinion about mortgage rates? Have we peaked at least for a little while? Will we get a pullback? I'm guessing, a pullback, of about, let me just estimate how far I think pullback will occur. If I'm correct, and we'll get into a bear market, that's a 15% drop for interest rates. So 15% drop for, that's about where I was thinking. So about 6% within a year. What do you think? Make a comment. Let me know what your guys' opinion is on the Treasury bonds. Switching gears, we're looking right now at dollar currency index, DXY. So first let's look at it on the weekly chart, DXY, dollar currency index. We have been on a tear. Look at this. 1, 2, 3, 4, 5, 6 weeks straight higher, non-stop. Okay. It's not always that this happens, and usually 6 weeks of steep price appreciation really is where we about gonna run out of steam. Like, for example, notice this drop here from February. 1, 2, 3, 4, 5, 6, 7 weeks. We're about there, I think. Additionally, I'm looking at today's Friday, the 25th of August candlestick, and it just looks like it's a topping candle. So we gapped up, looks like a hangman maybe. We gapped up and then sold off, more or less. I mean, it's not a very good looking candlestick. It's sort of like there's a little gap here. Maybe it's an exhaustion gap. It's a partial gap, but nevertheless. So this rally is really big from the July lows, and I think we're approaching the top for dollar. So why do I care about dollar? Dollar currently is in a downtrend. By extension, if we trade gold, and we do trade gold, if dollar is in a downtrend, gold should be in an uptrend. Reason being is because we're looking at this equation, gold divided by US dollar. If the lower part of this equation will get smaller, gold will kind of become quote-unquote more expensive. Right now, gold is in an uptrend. It broke out into a new uptrend right there where I'm hovering, the 13th of January. Previously, it was in a downtrend. Uptrend, we want to be buying next to the blue line. So there you can see pretty nice opportunities. For example, there's one right there on 29th of June with a reasonable rally. You could have made money there. And another one just a few days ago. So a signal just occurred exactly where I wanted it to occur, at the level of around 1900. So looks like so far gold has held on to this hugely important level, support resistance level of around 1900. And my chart is 1897. If it continued lower, it would have been in danger of getting into bearish territory. Bearish territory is at 1784, $1,784 per troy ounce. We thankfully haven't gotten there yet, so we're looking right now at gold and gold miners potentially making another run higher. But the dollar needs to top. Okay, dollar cannot be appreciating at the same time as gold. So ideally, dollar should tap out now. But there is a new, a hugely large resistance level for dollar, just a little bit higher. It's like less than 1% away. It's about 1% away at 105. It's marked by the red line. So we're waiting for dollar to top, but we're already buying gold. It looks like gold is already turning around. So we can actually look at silver, XAG USD. That thing just popped higher, exactly where I wanted it to pop again, at the blue line. So we'll see, if this is it. If this is a beginning of a new uptrend for silver and gold, we are trading it once again, and we are looking to for gold to continue higher from here. Looking briefly at the weekly chart of gold, I have shown this chart in the past. It's a very large, I'm going to turn off my indicators for a little while, but possibly a very large cup and handle kind of business. I don't know, maybe another handle. It's a double cup with handle, with two handles. The depth of this pattern is around 23%. So if it does break higher, so basically we need to close at new records. Right now the records still hold from August 2020 at around 2070 or so. Let me make sure what's the exact number. It's 2075. If we close at new records, then it's a very reasonable kind of thing to suspect another $400 move. So if that happens, we're looking at gold at around 2,500. What do you guys think? Make a comment. Do you think gold will go to 2,500? Maybe within a year. All right, and let's wrap things up with Bitcoin, BTC USD. This is a live chart. Remember that this is traded 24 hours a day. So I think Bitcoin is in an uptrend. I'm going to look at it from the weekly perspective for now, quickly. So here's Bitcoin on a weekly chart. So until very recently, it was in a downtrend. Notice this downward facing arrows around the red line. We would have shorted it around the red line. The latest opportunity was from 43,000, went as low as 13,000. So big move, really. And then once again, notice how the indicators are were very wide apart. Okay, then they got closer together. They got very close together right there, and this is what I was trying to say. This is how I usually look at the price action, and how I usually read it is that when the indicators are very close together, there's a higher chance of trend change, and this is why I'm saying the bonds are sort of doing the same thing. I think maybe they're bottoming out. So the breakout did occur right there where I'm hovering in May of this year. We can look in the daily chart to show you exactly where the breakout occurred. It occurred right there, 15th of February. Okay, so at that point I'm saying that Bitcoin is no longer in a downtrend. It is now considered to be in an uptrend. We're buying it on close above the blue line. There's the opportunities. Latest opportunity right there, just a few days ago, and actually even right now. I bought myself at 26,600. Let's see if we make a pop higher. I think, easily we can get to the 52-week highs, which is around 32,000 or so. Can it go the other way? Sure, absolutely. Many of the other cryptos are in the downtrend. The bearish levels, downward, or the bear market level for Bitcoin is at 22,100. So there's the number. I'm reading it right off the chart, 22,152. That's the bearish levels for Bitcoin. So that's my risk. If I bought it at 26,600, if it gets to 22,000, then I was wrong. But I think right now there's a very reasonable chance for a bounce higher, and this is exactly where I want to be buying it. Again, what do you guys think? Make a comment. And then, what do you think? Is the Bitcoin going to continue higher, make a new 52-week high? Will it continue lower towards 22,000? What do you guys think? I thank you for watching all the way to the end. If you are interested in what I have to say, head over to masterchartstrading.com, click on sign up one of the products. I have two products and one kind of like a bundle. I have the trading indicators, so these are the lines on this chart. You can trade pretty much anything you want under the sun on pretty much any time frame. So for example, this Bitcoin, we can look, I don't know, 3-minute chart. Not an ideal chart. You can see the more inside, the shorter the time frame, the more choppy things get. But you could trade it. So for example, going back here, there's the breakdown back in August 24th. Short, and then we have a turnaround into a new uptrend, a big spike here of volatility. Now we're in between. So best thing to do is to trade on longer term time frames, daily or higher. Also, I have a newsletter. I send out daily alerts. So, for example, in today's newsletter, I will send out a weekly members-only video. You can see we have quite a bit of stocks to cover, various ETFs, emerging markets also, or there are foreign ETFs, bonds, large cap stocks like Amgen, Tesla, Nike, and a whole bunch of various small caps that are sort of breaking out. I call them speculative stocks like Coupang, CrowdStrike, Carvana, Aurora Innovation, Shopify, Upwork, etc. Also, we do trade gold, so sign up for that. And also, of course, the best deal is to get both newsletters and indicators, so sign up for that on my site at $59.95 per month. I think it's a very good deal. Again, please don't forget to hit the like button, subscribe to this channel, share this video, and I thank you for watching this week's recap. Have another great trading week. Bye-bye.